Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Yesterday, Treasury Wine Estates announced a big drop in its full-year profit, largely due to write-downs on a number of its cheaper brands. Those brands, Wolf Blass, Lindemans, Yellow Glen and Blossom Hill, are all set to be sold, with Treasury focusing more on premium wine, led of course by Penfolds and an expanded luxury portfolio in the US. This earnings season, we're working with the team at Ausbiz to bring you interviews with the leaders of some of Australia's biggest companies. Ausbiz is Australia's leading provider of live and on-demand video of the latest news in Australian business, markets, economy and startups. Sign up at ausbiz.com.au. It's free. Andrew Geoghegan spoke with Tim Ford, Chief Executive of Treasury Wine Estates, about the results, selling off the cheaper brands and re-establishing Penfolds within the Chinese market.
Well, Tim Ford, welcome to Ausbiz. Thanks for joining us post your results. Congratulations on that. Let's first go to those numbers. Profit down 61%. What is that attributable to?
The statutory net profit down 61% based on a non-cash impairment we announced to the market last week for our Treasury Premium Brands business, Goodwill and some brands, some commercial brands and that. So that's been the biggest driver of that. Yeah, when you look at net NPAT, excluding that non-cash impairment, we're up about 8%.
Overall, how do you look at the result? How would you sum it up?
Well, I think it's proof of our strategy working is the way I sum it up. To have both Penfolds and our Treasury Americas business delivering $1 billion net sales revenue top line for the first time is fantastic, and particularly Treasury Americas driven by its luxury wine portfolio, which is clearly the strategy we've invested behind based on recent acquisitions and the focus of the business. So very, very pleased that the strategy we've been working on is now coming to life through our financial performance, and we've got some good momentum.
So, Tim, as you outlined there, very much the focus now on that global premium model in the wake of your strategic review. So is that the focus now for the business? What happens to those cheaper brands, if you like?
Yeah, definitely. Look, our business now is nearly 80% of our earnings comes from what we think luxury wine, which Australian dollars is $30 and above. So it's been a very big shift in our business globally over the last couple of years, and clearly higher margin, more certainty of earnings, more consistent growth you see in that category. And as part of that, we still have a few commercial wine brands, below $10 brands in our business today. And we've announced as part of this results that we'll also be divesting a number of those large scale but low margin commercial wine brands over the course of fiscal 25, which will continue our drive towards increasing the margin and improving the mix of our business and the quality of our earnings. So
divesting some of those brands, there's some speculation you may spin off that the cheaper brands, if you like. You're willing to comment on that?
Look, I mean, we announced also today that we will bring together our Treasury Premium Brands division with the similar brand portfolio out of our Americas division into one team by the end of this fiscal year, and that does enable us optionality to create value going forward if that's the decision we make. But the first two decisions we've announced today is the divestment of that low end portfolio, which I think is important for us, and also the creation of this new global premium structure. It will unlock optionality in the future, but right now we have to improve the performance of that business as well as a supporting role to our luxury strategy.
Tim, how would you describe the success of your acquisition of Dow and its integration, how it's performing at the moment?
Look, it's the brand continues to perform very, very well in the market in the United States. So that's it's always pleasing after particularly such a sizable acquisition that it's delivering to its plan that we outlined for the first 6 months of ownership. So, that's good news, and the momentum behind the brand is there as well, which is great. Integration-wise, we're in execution mode now, so it's always nice to move from planning into execution for these activities as well. So, synergies are well and truly on track. Team structures in place, and it's about execution now in FY25. So, we're really pleased with how that's come together, and the team in the US have just done a fabulous job combining both in the last 12 months.
Any other acquisitions on the table? Are you keeping your options open?
Right now we've got our focus on delivering on the business cases for the acquisitions we've made. So I think that plus the opportunity clearly with Penfolds globally, with the reopening of China, that's a really focused plan for us to deliver what is fantastic growth over the next couple of years. So I don't see us acquiring new brands. We'll always be on the lookout. So in the near future, in particular, in the longer term, clearly we'd start looking at that again once we've delivered on the current ones. But that being said, from a supply point of view, vineyards, assets around the globe that support the growth of our luxury wine business, we're continually looking at that. But from a brand point of view, I think we've got a pretty good portfolio right now.
Tim, you mentioned China. Obviously, following the removal of those tariffs on Australian wine imports into China, what's your strategy? How are you rebuilding that business?
Yeah, look, it's we're about 3 months back into it now, and we've kept our distribution model. We've kept our team in China throughout the tariff period of time by selling our French, our American Penfolds and other brands, as well as most recently a Chinese sourced Penfolds as well. So we've maintained the relationship. So for us, it's certainly not starting from scratch. It's re-establishing that portfolio, and the products in market, the distribution is certainly going at great pace, and customers are starting to reorder after their initial orders, from the tariff removal. So yeah, it's a pretty exciting time. I mean, number one brand, from a brand awareness point of view, Penfolds is still the number one luxury wine brand in China, even though we really haven't been there for much of the last 3 years in a meaningful way. So yeah, we've got the platform ready to go.
All right, that's that brand recognition, which is obviously heartening for you. Tim, what's your guidance? What have you provided?
Yeah, we've guided to earnings in fiscal 25 of 780 million to 810 million, which, on the back of 658 this year is a significant growth. Now, that includes a full year of the Dow earnings in the Treasury Americas, but that'll be driven by our luxury portfolios, Penfolds, and within the Americas business, supported by premium, which we believe will be broadly flat year on year. So we've got a strong year ahead of us.
And what do you make of the economy, and I guess how the consumer is travelling at the moment? I guess particularly, with the issues at that lower end of the market, as the average consumer deals with those cost of living issues.
Yeah, look, it's challenging at the lower end of the market. There's a real bifurcation of the category, within wine, and like there is the number of categories. And I guess fortunately, we've shifted our business more towards the luxury price points significantly over the last couple of years, and that's remaining, very strong in terms of sales. So, that's right around the world. It's actually quite consistent in all markets around the world. Whereas, if I use in Australia, for example, below $15 is certainly challenged. So the cost of living pressures are really hitting there. But in saying that, every consumer around the world, wine consumer around the world, is drinking less but drinking better priced wines. That's a trend that's I'd say it's not even a trend. It's just going to continue to happen, as the health and wellness conscious consumer continues. So, shifting up price points is crucial for us.
That was Tim Ford, Chief Executive of Treasury Wine Estates, speaking to Andrew Geoghegan from Ausbiz. Sign up at ausbiz.com.au. It's free. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, a daily business news for people who make their own decisions. I'm Sean Elmer. Enjoy your day.